Bitcoin is currently in the calm before the storm, and what a storm it will be when it finally comes. I'm going to take a look at the Bitcoin chart and all of the news that's driving the markets right now. Let's go. What's up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel. Go ahead and hit that thumbs up button right down below. Now, as I said before, Bitcoin has been trading sideways, consolidating, but one thing we know, the longer Bitcoin consolidates, the longer that it chops like this, the bigger the next move is likely to be. Consolidation leads to expansion, and longer consolidation leads to larger expansion and a more explosive breakout. I'm going to take a look right now at a few indicators and at the Bitcoin chart, and we can see what is going on. Now, as you know, I have said there's nothing much to trade right now. Bitcoin is effectively trading in a range between 30,000 and 42,000, and traders with a larger time frame are probably waiting to see what happens at either of those two levels. I want to take a quick look at the weekly MACD. I've been seeing a lot of talk about it. Even CoinDesk wrote an article about it. As you can see, we've never had the histogram this negative on the weekly MACD. That should mean that a bounce is coming, at least on this indicator. And a lot of people are pointing to it to say that if we do have a major breakout, it should be to the upside. Another indicator that a lot of people have been looking at on the daily are Bollinger Bands. Now, as you can see, last December, Bollinger Bands tightened before this move all the way up from around 18,000 to 65,000. And then they got tight again here in April before the major move down. Well, we haven't seen this level of tightness before in ages, and now we have eclipsed how tight they were in both April and December, which should indicate that volatility is coming. Of course, that doesn't tell you when it's going to happen. It just tells you that there should be an explosive move coming. We were already talking about this last week, and nothing has happened yet. But it is really notable to know that these Bollinger Bands continue to tighten. Now, taking a look at the daily chart, you can see basically nothing has happened for weeks. I can't stress this enough. We do have this ascending blue line, plenty of wicks below, but it has held as support. It's being retested right now once again. 1, 2, 3, 4, 5, 6, 7, 8, ninth time. For the ninth time. And this was the pennant that a lot of people were looking at before broke down, became this descending blue channel. As you can see, the 50 MA is starting to flatten out. That's pretty good because it's definitely stronger resistance when it's pointing down and screaming down as it was before, but not really that important. And you can see the price has been consolidating just around the EQ, this dashed line of this descending channel right here. Very little to see here. Very unexciting. Yes, we've had a bit of downward price action today, but when you look at it in context of all the days before, it's the same thing that keeps happening. Now, if we see a drop on significant volume, we can change our bias. That could even happen before this video comes out. But for right now, we once again have a community that's seemingly very bearish while price is sitting on support. Looking at the 4-hour chart, we have this very local support, not something I would trade, but we have a lot of wicks below it and closes above, although this candle is yet to close. We had these three that wicked below and closed above. Those are kind of bullish SFPs, but they are an indicator that there's buying interest down below this line around 32,363, and that we've seen a bounce from that area every time. Lots of demand down there doesn't mean it can't be pushed through. We also have this pretty clean resistance here in this darker red channel that's forming. A descending channel should technically break to the upside eventually, so that is worth watching. But again, this is all very nuanced, all very zoomed in, and at the end of the day, we either break down and close candles below this red range or above it, or even above 42K, which was the previous high that we've discussed from way back earlier in the year. Now, the most interesting thing here, if you're a scalper, you like to look at low time frame charts. We do have oversold bullish divergence on the hourly chart here. It did confirm at 10 a.m. EDT, which is where I am about 30 minutes ago as I'm recording this. Now, what I like to see, knowing an hourly bullish divergence, the smaller the time frame, the smaller the move. So this could predict a small bounce, but nothing major. But what we want to see is maybe this hourly bull div gives a little push up, and then we start to see those compound on the 4-hour, 6-hour, 12-hour, etc. As you can see here on the 4-hour, we do not have it right now, but we do have a lower low in price and a lower low on RSI. But if this pushes up over the next hour and a half, as I'm recording this, we could have bullish divergence on the 4-hour. That would be more compelling because those tend to be at least local bottoms. And notably, looking at shorts here on Bitfinex, we know that the majority of leverage trading does not happen on Bitfinex. So this is generally one whale who's compounding their position. Well, seemingly they've stopped adding to their shorts. Each time that's happened, we've seen them wind down and price go up. So maybe if this ceases to go up any further, we start to see these shorts unwind and price can rise. That's really all I'm watching on the chart, the divergence being the most interesting thing, but still important to remember if you zoom out. This is nothing but sideways chop, extremely low volume consolidation. We just need to wait for that volume to kick in and for expansion, and that will happen. One thing we know, no matter what, volume will come back when it is needed. Now let's dive into a bit of the news that we're seeing today. Market wrap, Bitcoin drops as traders await June CPI inflation report. Are any of you actually awaiting the June CPI inflation report to decide on what to trade? We are just seeing the media now at this point. I'm not really trying to criticize, but they're trying to make a story out of anything. As I said on Twitter yesterday, I was going to make a video yesterday, but there was just nothing to make a video about, so I didn't do it. Sometimes it's just better to stay quiet and watch because there's not much that's happening, but it is notable that CPI numbers will come out today. Last month, we saw a 5% rise May over May, and they're expecting about a 4.9% rise today. But as I said here, analysts describe the muted activity in spot, derivative, and on-chain metric as calm before the storm. That leads to what I said in the introduction. Eventually, we're going to see that volatility return. Crypto derivatives trading exceeded spot in June as prices fell. This is only notable because spot was leading the entire bull run basically, and now we're seeing that not much interest in spot buying, which would indicate that the institutional buying has somewhat dried up, at least for the moment, and that primarily this market is once again being driven by traders, which is impressive because I don't know how you can trade this chop. As we know, and I've reported before, there was a 50% drop in trading volume across exchanges from May to June. That's a significant difference, showing that there's just not much interest right now, not much volume in the asset. Binance payments cut off by Clear Junction. The hits just keep on coming for Binance, trying to kick CZ when he's down, which I think is unfortunate. As he's said many times, he compared it to the automobile. You know, they started these exchanges, there was no regulation, just like the car. People were out there going YOLO, driving around, running into things, no seatbelts, no brakes probably on some of the early cars. But what did they do? As it was needed, they added legislation. That's likely what we're going to see in crypto. But for now, it seems that a lot of their partners, or at least the payment rails that they've been using, are backing off for the moment to wait and see what happens with regulation. In this case, Clear Junction. U.S. financial giant Capital Group buys 12% stake in Bitcoin, exposed MicroStrategy. Huge. The purchase provides the firm with indirect exposure to MicroStrategy's more than 105,000 Bitcoin reserves. This is Capital International Investors. They bought 12%, 953,242 shares of MicroStrategy last week, right before the bell. So somebody finds this to be clearly an interesting way to buy a whole lot of Bitcoin without actually having to buy the asset. They're gaining exposure through MicroStrategy, which has become a bit of a de facto ETF. My podcast that released today was a 2-hour almost conversation with Michael Saylor, definitely worth checking out. By one measure, Bitcoin is one of this year's worst performing asset classes. The cryptocurrency is up, but it's been quite a roller coaster to get there. Always good to look at the other perspective, right? Bitcoin's up about 16%, but if you look at the risk-adjusted return, the Sharpe ratio, it's way down here at the bottom, 1, 2, 3, 4, fifth from the bottom on all these assets. It has underperformed almost anything not named gold or bonds. That's not really that encouraging, but once again, it's a bit difficult to just zoom in on the last 6 months and judge Bitcoin when we've seen it go up thousands and thousands and thousands of percents. Fidelity Digital Assets plans big headcount boost in response to institutional interest in crypto. Now, while we're all sitting here waxing poetic about what's going on with price action, institutions are building out their services, and they would not be doing that unless they thought that crypto was here to stay and was going to be a serious asset class moving forward. Well, here's the news. Fidelity Digital Assets, the crypto-focused arm of the asset manager Fidelity, plans on hiring as many as 100 employees to bolster cryptocurrency projects in response to institutional demand in crypto. So just because institutions are not buying right now, that could be a function of price. They are interested. Fidelity knows that, and they are absolutely building for the future. Goldman Sachs calls Coinbase a tactical trade, predicts Q2 earnings beat. Well, it's interesting. I agree with this because there was a ton of volatility in Q2, so they should beat earnings in Q2. But think about what's going to happen in Q3, which we know we're in the middle of right now, and that we've had major decreases in volume and volatility. So it's important to note, As we know, 50% decrease in volume, probably a lot less signups. That Q3 might be a little rough for Coinbase. I am an investor. My bags are so heavy I can barely get up in the morning. I swear that I've been holding my breath now for months, and eventually I'm going to run out of air. But I do believe that Coinbase will be one of the most important companies in the world in the coming years. And when I invest for years to come. Not too worried about my underwater Coinbase bags. Nice to see that Goldman thinks, hey, maybe it's a tactical trade, beating Q2 earnings. And finally, crypto pioneer Quigley sees NFTs everywhere in next 10 years. Co-founder of Tether sees authenticity as big draw for token. Quigley says NFTs can also be used for environmental projects. I talk about this all the time. Digital collectibles and art, those are very small, minuscule part of the use case of NFTs, which will be absolutely huge for so many things in the future. Here's what he said. All consumer products that can't be eaten in the next 10 years will have digital twins. They will have NFTs. Mortgages, car titles, art, collectibles, literally anything that can be transferred from one person to another that does not need a centralized authority can be made into an NFT and traded and moved seamlessly without those annoying third parties and toll collectors. He's right. They're going to tokenize and NFT absolutely everything. Guys, that is it for me. Once again, please check out my podcast today with Michael Saylor. Also, subscribe to the newsletter down below. I'll be doing a live stream tomorrow at 2 p.m. My weekly Chartapalooza, where I take requests from paid subscribers. So you can join and go ahead and request a chart. I will take a look at it for you. Pretty sweet. Until tomorrow, peace.